Hello everyone, it is Sterling here from Day Trading Forex Live. It's February 26, 2014, and today we're going to talk about a very interesting subject, and that is manipulation of the market, manipulation of the retail trader in and around economic data. So, what we're going to discuss is really the foundation of this market. It's important to understand that only 5 banks control 58% of the daily volume in this market. That's a number that is not something I pulled out of a hat. You can go to Wikipedia, look up that number. That is the latest BIS numbers. And with the Bank of International Settlements, that is a number that is updated fairly frequently. It doesn't change much. The bottom line is a very small group controls a very large percentage. If you were to ask yourself, think of any stock, if you knew the trader that controlled 58% of the daily volume of that stock, and you were able to buy when he was buying or sell when he was selling, would you benefit from that information? The obvious answer is yes. Now, conversely, would it be a major deficit if you were buying when he was selling and if you were selling when he was buying? Well, obviously, again, the answer to that is yes. So wouldn't it make sense that if you could track the person or the institution controlling 58% of the Forex market, wouldn't the same logic apply to that? Again, the obvious conclusion that we're drawn to is yes. Now, the trouble there is, how do you do it? And at the end of the day, us as retail traders, we do have our limitations. We will only have access to certain information. But what we do know is that if you controlled the majority of the market, you would struggle to find buying pressure when you want to sell, and you would struggle to find selling pressure when you want to buy. Because if you're just buying into a market that's flat, you're going to begin to create a rising market. That is going to allow you, or that is going to mean you're getting a worse and worse entry the further that market rises. So what smart money often does is they sell into they sell into an already rising market. So if the market is rising, that is a perfect time to be selling into that buying pressure, or vice versa. They buy into a falling market. They're buying into the opposite side. And by the very nature of what they do, it puts the retail trader almost always at exact odds with smart money. And that should illustrate why the retail trader has such a dismal rate of return on their money, or percentage of traders that actually create a profit. So today we're going to talk about how you can get on the side of smart money, how you can begin to track what they're doing in and around news specifically, and we're going to use some real life examples. So we'll start with last week, Friday, the 21st. And I'm not going to get into how they know the news prior to it coming out. That's a whole nother subject. I'm just going to talk strictly about what's occurring at this time. Basically, we had UK retail sales coming out. UK retail sales right here on this candle comes out, and it is coming out worse than expected, 0.6 worse than expected. Retail sales is a big market mover, probably one of the top 5 market movers as far as economic data is concerned, and it's been consistent for years. I remember spike trading at retail sales, UK retail sales, 7-8 years ago. It is a very consistent indicator. It's been a big mover forever. So with that being said, if you see retail sales coming out and it's a negative piece of data, obviously you have the rest of the market that's piling on, selling into that weak data, expecting to see the market falling. If you look at the pound in this scenario, I'll really zoom out here. About right here is where I was talking about. It was breaking this previous low. Remember that as this came out, it was breaking the last previous low. Almost looked like it was creating a breakout to the downside. And that's the key. This 66.30 level was a predetermined level. This is a level that I chose in the daily market review right around midnight Eastern. So I chose it about 4.5 hours prior to the start of the session. Again, if you want to know how I pick manipulation points, there's a lot of information on the site for that as well. You can check that out. But the bottom line here is the news was used to create the false break. So the news, that low liquidity time, was used to induce the selling pressure, create a false break, which is what we term as a stop run or manipulation. It was used to push the price into an area of liquidity. As you push through a low, you're going to induce further selling pressure. That's why it was a pre-selected manipulation point. As they induce the selling pressure, What does that allow smart money to do? It allows them to buy into the selling pressure and get a great price. It allows them to enter a desired position without, it allows them essentially the liquidity to enter that desired position. After the desired position is entered, the price snaps back, pushes back to the upside. A good illustration of smart money using economic data to create a false break to, in this case, buy into the selling pressure. Well, maybe that was a coincidence. Let's go ahead and move forward, and we'll go to let's go to the 24th. It was the very next trading day, Monday. Monday, what did we have coming out? Well, you go back, you look, we have German IFO business climate. Now, German IFO came out better than expected. Again, this is one of our predetermined levels, 3762. I chose it right around this time right here, which is midnight, 1 a.m. Eastern. So I'm choosing it 4 or 5 hours in advance, or 3-4 hours in advance. Trading day starts at 2 o'clock, so the review always comes out prior to trading beginning. Why did I select it? Well, very simply, previous major turning point in the market, always going to accumulate orders in and around that level. What is the second part to this? Well, the second part to this is that it was positive data. It's going to drive the euro up, and that's exactly what happened. This euro spikes to the upside in the direction of positive data. But if smart money is using that, what are they going to do? They're going to snap it right back. And that's the first indication that smart money took the price into a predetermined manipulation point. They waited for the news. All the suckers bought into the positive data. And who was the one selling to them? Well, smart money was more than happy to sell into them because they knew what they were going to do next. They knew they were going to snap the price back, create a falling market. So they wait for this time where the rest of the market is going to be buying into that market, expecting a rising market on the positive data. They sell into all the buying pressure. Later, we had a confirming entry setup right here. This was a picture, really a picturesque type trade. Did everything we wanted, and entry was taken on a pullback. A lot of information on picking manipulation points and the confirming entry on the site if you want to check that out further. Because we don't have specific time or we don't have time to specifically cover all those here today. Otherwise, it'd be a 30-minute video. So, anyways, again, the positive data was used to create the false break of a predetermined manipulation point, and that is done in an effort to create buying pressure because they have to find buying pressure if they want to sell into that market. If you control a massive chunk of the market, you have to find the other side. News is a great time to do that. Well, again, maybe a coincidence, maybe just a random thing that occurred. Well, let's go to the very next day. We go into the pound. Let's go to the 25th here. And what do we have? Well, again, we have a predetermined manipulation point, 1.6717. I chose it right back around here, again, around midnight, 1 a.m. And we'll go back. Why did I choose it? Well, previous major turning point, always going to be a level that accumulates orders. Pretty straightforward. So what do we see happen? Well, news today, consumer confidence on Tuesday. This is, again, the 25th of February, 2014. What do they do on negative dollar data? Well, negative dollar data should do what? It should drive the pound dollar up. People would be buying pounds, selling dollars, which would drive the pound up. That's exactly what happened short term. This candle right here was when the news comes out. The market spikes up initially in the direction it should. Again, negative dollar data should spike the pound up. The pound spikes up past that manipulation point, creating the false break, inducing all that buying pressure, and lo and behold, what does smart money do? They begin to sell into that buying pressure. The market snaps back and drives to the downside. Now, this is something that's occurred 3 days in a row. That's usually the catalyst of a lot of videos I do. It's something occurring recently in the market. Now, is this a random 3-day period that is really rare, doesn't occur? Well, the bottom line is news that can move the market doesn't occur every day. So that's one of the limiting forces. But this is really just an illustration of a standard setup. Manipulation around these high probability points is something we look for every single day. It's something that occurs every single day. It just so happens that when it occurs with news, and when that news is the actual catalyst for the false break of our predetermined levels, I'm not saying I select these levels when it occurs. These levels are written down 2 hours before the session begins, and we have a track record of these levels predetermined. And so it's a simple matter of waiting for the market to get into those levels and either confirm the trade, give us an entry, or do what the confirming entry does really well, which is keep you out of a bad trade. That's one of the strong suits of the confirming entry, not just to get you into trades, but to keep you out of bad ones. So when it creates that manipulation around those points, and news was the catalyst for that stop run, we have more confidence in the reversal, and it produces a very high risk reward scenario. Doesn't mean we're going to win every trade, but again, it produces that high risk reward scenario. That's exactly what happened here. Really nice stop run of those levels. Again, the news being the catalyst for creating the stop run, and a nice setup overall for tracking what smart money is doing. At the end of the day, there's two types of traders. There's the type of trader that understands what smart money is doing, and there's the type of trader that doesn't understand what smart money is doing. What we know is that 5 banks control 58% of the volume. So just like the example in the beginning, if you knew the trader that controlled 58% of a stock, it's going to be a huge advantage. So is true in the Forex market. If you know what smart money is doing, you have a major advantage. On the flip side, if you don't know what smart money is doing, you're going to serve essentially as the manipulation fuel for them to either buy into your selling pressure or sell into your buying pressure. Now, obviously, in one individual trader really doesn't matter. It's the accumulative whole that is really the focus. And so the power in identifying what smart money is doing is really critical, because it's indisputable they are the controlling force of this market. That's not really a disputable fact. The numbers support that, and at the end of the day, numbers don't lie. So we as traders have a choice. We can either understand what the indisputable controlling force of this market does, or we can continue to believe that some magic indicator is going to give us an indication of future market direction. And so our belief is that at the end of the day, nothing matters but smart money. That's the entire focus of Day Trading Forex Live. If you want to learn more about that, feel free to check out the site daytradingforexlive.com, or shoot us an email at daytradingforexlive@gmail.com. We will be happy to get back with you. I look forward to seeing you guys next time, and until then, happy trading.